Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is May 14th, 2025, and we're diving into the first quarter earnings report of Smith Douglas Homes. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Smith Douglas Homes has shown some interesting results this quarter, and I'm excited to break them down with you.
Revenue and profitability overview. Let's start with the top line. Smith Douglas Homes reported a home closing revenue of $224.7 million for Q1 2025, which is a 19% increase compared to last year. John, can you shed some light on this?
Absolutely. The increase in revenue is primarily driven by a 19% rise in home closings, reaching 671 units. However, it's important to note that the gross margin has slightly decreased to 23.8% from 26.1% last year, indicating some pressure on profitability despite the revenue growth.
And how did they perform in terms of earnings per share?
Smith Douglas Homes reported an adjusted EPS of 30 cents, which aligns perfectly with the forecasted EPS by analysts. This consistency shows that the company is meeting market expectations even amidst some margin pressures.
Operational efficiencies and future outlook. John, let's talk about Smith Douglas Homes' operational efficiencies and future outlook. What are the key highlights?
The company has significantly increased its active community count by 24% to 87, and its total controlled lots by 45% to 20,442. This expansion positions them well for future growth. However, their debt-to-book capitalization has risen to 9.5% from 0.8% last year, which is something to keep an eye on as it indicates increased leverage.
What does this mean for their future prospects?
Despite the higher leverage, the increase in active communities and controlled lots suggests that Smith Douglas Homes is strategically positioning itself to capture more market share. Their asset-light strategy and strong balance sheet should help them navigate the current homebuilding landscape effectively.
CFO Insights. Let's delve into the insights from the company's leadership. What did the CEO and CFO have to say about the quarter?
Bennett, the CEO, highlighted the strong profitability and efficient execution by the team, which led to a solid start for 2025. Meanwhile, CFO Russ Devendorf noted that while demand was somewhat inconsistent, the company remains confident in its strategic plans. They are seeing good traffic to their website and communities, which reflects the appeal and value proposition of their homes.
It sounds like they are optimistic about their strategy, despite some challenges.
Indeed, they are focused on long-term growth goals and believe their operational execution and balance sheet strength will help them succeed in the evolving market.
Key takeaways. To wrap up, Smith Douglas Homes has delivered a solid performance in Q1 2025 with a 19% increase in revenue and meeting EPS expectations. Their strategic expansion in active communities and controlled lots sets a positive tone for future growth. Thank you, John, for your insights today.
Thank you for having me. It's been a pleasure discussing Smith Douglas Homes' performance.
Thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial insights. We'd love to hear your thoughts on Smith Douglas Homes' performance in the comments below. Until next time,